Good evening, everyone. Time for another silver update. I'm going to start out by eating some crow here on the daily silver data information. I actually reached out to the administrator of About AG, and he explained to me when you go to the Mint's website, they publish the monthly data. They don't publish any daily data. So he actually, by hand, collates it and adds it up, what comes in each day. So the figures that I were looking at, like this span here, I can't believe I didn't notice it, but this span is when the Mint ran out of Silver Eagles, and they weren't selling any. So this is a cumulative total starting at the beginning of the month. You can see October ended at almost 6 million, and November ended at about 3.3 million. Now, would it have beaten out October? Probably, considering how low the silver price was. But interestingly enough, no one was able to get silver between the time frames of the 5th of November to, they said they were going to sell again on the 17th. So for those 2 weeks roughly, there was no silver coming out of the Mint. I guess it was very fortunate for them because the price was so low at that time. But so we can see many other times here. I don't know what really accounts for those. You can see a period here in June where we had many days in a row where there were either no updates from the Mint or none were sold. Here's another one of many days in a row from the 13th of May to the 22nd of May, no Silver Eagles were sold. So what does that mean? Well, it possibly means that the primary dealers, the ones who buy from the Mint, had enough that they didn't need to order any. That's a possibility, that the public demand wasn't that high. So anyway, those figures are what they are. They're put together daily by the administrator of the site. So that's the explanation. So let's jump over to the silver chart because we have some interesting action today. We're going to keep in mind this November 5th through November 17th date when we look at that. But we'll start off with the major trend lines here, and that's really important because we violated this first trend line that I drew this a long time ago, and that was actually taken out back in June. And that's when that was violated, but we didn't get a continuation rally. We actually rolled over and went down. So that gives us a secondary trend line here, and that's going to give us a price of about 18 bucks on silver. If we get to that price, that will be a breaking of that primary downtrend line. That's a very critical line. You can also see that we're up to a very important resistance line as of today, and we'll get to today's action when we zoom in closer. But you can see that that line is actually the resistance that we reached was this line here. The upcoming resistance is all the way up here at 18, which matches closely that long-term downtrend line. So we're working on testing this resistance. That's not going to be nearly as significant as the resistance that we have around the 18 price. You can see that resistance, well, it was support, it's now resistance. That actually lasted from July of 2013 all the way to October, or actually September of this year. So that's about 14 months that was established. Now, the biggest one, of course, is going to be the 26 price, because that's going to be resistance that held from all the way back the 10th of 2011 to where it was broken with the Boston Hoaxathon on the 15th of April. So that one is very long, many months. That's going to be a very challenging price to get through. Now, this volume is absolutely key. You can see it's so large, but it's not so large in the recent past. It's so large right here when we were coming off of the lows. That's when the massive volume came in. Even this spike here, this outside reversal spike, a lot of people talk about that technically. that reversal there didn't come in nearly as much volume as the buying that came in. And this is actually, we're going to look at those dates now, when the mint was closed. So if you remember, that was for this time frame here of about the 5th through the 17th. And you can see quite conveniently, by the time the mint came back and started selling Eagles, we had a price up of about $16.50. Whereas we had a price all the way down at 15 bucks or so while they were closed. So about $1.50 loss per ounce for people who couldn't buy at that time directly from the mint. Then of course the big outside reversal day. Outside reversal day is a day where you actually, that's actually going to be on the daily chart. But an outside reversal day is a day where you trade above the previous day and below the previous day. And that's called an outside reversal. I'm not that big on technicals, those kind of technicals, but that is something significant to note. So if we get in real close here with the 5-minute view, you can see what we did today. It wasn't on major volume, but it was on significant volume that we got this rally here. And this occurred when a lot of other fireworks were occurring in other markets, and we're going to look at those. So you can see that kind of takeoff there and touching that 17 price. That's a very large move. If you think about, that's about a week's time of a little over a week trading from 1440 all the way up to 1720. That's a very, very large percentage move. So will this continue? I think it will. I think the bottom's in. I was, of course, wrong by saying the bottom was in before. Now a lot of people are saying the bottom was here at this outside reversal day. And of course, I could be wrong again. This might not be the bottom. But it certainly looks like a bottom. It's a very, very powerful formation. Everything's lined up. And the big question about this volume here is how many people turned around and got long. There's two explanations I can think of here that might explain this amount of volume. One could be, and again, I don't believe these are contracts. There's some other amount, but I don't know what that is. This is mainly not on the COMEX. This is probably LBMA mostly and others added together. But regardless of what the units are, this is tremendous volume historically. And as I said, the volume came in here before the reversal day. Now, how many longs are going to stand to not necessarily get silver, but hold their longs? In other words, if they roll them over or if they ask for delivery, they're standing. That's what I mean by stand. In other words, stay long. Now, how many shorts came in and covered their shorts? Now, I don't think you can account for this volume as short covering because there just isn't any volume before it. Maybe if all of this volume was carried all the way to here. Nevertheless, either one is extremely bullish. If this volume is a large amount of short covering, that's very bullish. And if all this volume is longs that came in and are going to stay long, that is very, very bullish as well. So let's look at some of the stuff that's going on in the world. We've got a crazy ride going on in the Japanese yen. You can see, we'll take the volume off here. The yen has just been absolutely destroyed by the Central Bank of Japan printing money like crazy. And this is almost kind of a outside reversal looking formation here. You can see that the yen was going into new lows. These are the number of yen to the dollar, so a higher price means that the yen is worth less. So the yen was going into new lows, and then you can see this huge reversal that we've got that took us all the way back to, it takes us back to really a test of back in mid-November. So this latest leg up or down in the value of the Japanese yen, this is all now being tested. The other thing we want to look at here is the Russian ruble, and that is still looking very shaky. It appears that it may be going into new lows against the US dollar. You can see that it's kind of forming up it's forming up one of these kind of flags. We'll go out to, say, the daily. So it doesn't look like it's about to reverse at this point. It looks to me like the ruble is getting ready to go into new highs, new lows in value, but new highs against the dollar, rubles per dollar. And what does that portend? Well, maybe it means war or something. Now, there is an article on Zero Hedge mentioning that Russia is getting ready to test an alternative to the SWIFT payment system. Will that strengthen the ruble? I don't know. But the ruble's in a very serious strait right now. Of course, another important market is going to be crude oil. You can see that it's very, very sick. It is not really turning around to speak of. And we all know what happened the last time that the price of oil collapsed. We got the financial crisis. So you can see that the collapsing price of oil, it actually went along with the financial crisis, because the crisis started in the spring was when Bear Stearns went under, but the financial crisis really started in the summer, and then all the way through that financial crisis, oil was falling. It fell all the way into the beginning of the next year, where it put in that bottom. So that's another very important thing that's going on in the markets. The markets are starting to act really crazy. Now, another thing that we had happen in China last night, we had a very large drop, about a 6% drop in the value of the SSEC, the Shanghai Exchange. There's the Hong Kong stock market and the Shanghai stock market. Both dropped 5 to 6%. Now, this is a long-term view of the Shanghai stock market against the Dow Jones Industrial Average starting in about 1994. So a lot of people on Zero Hedge and other people like that, China, I call them China bashers, talked about how China is in a bubble. Well, China may have been in a bubble back before the financial crisis, at least their stock market, although that looks like a breakout to me. But it definitely corrected back. You can see that the Chinese stock market really went nowhere for a period of almost 15 years here. Now, it's just recently started to rally. If I were to invest in any paper market, which I don't, but if I were to invest in a paper market, if I could invest in the Chinese stock market using their currency, because I think both are going to significantly appreciate from here, that would be an unbelievable investment. So for those of you with a lot of money and maybe can find a way to do that, I don't know if you could do that in Hong Kong, but China has been building its industrial power for many, many years now, and it has not been reflected in the price of its stocks. So that, to me, that's what Jimmy Rogers talked about when he invested in Germany and made a killing a lot of other markets. When you have a market that is in a country that has grown economically tremendously, but the market doesn't reflect that growth, that's probably a pretty good market to invest in if you're going to invest in stocks. So we have this recent turnaround with about a 6% drop. But again, the Chinese stock market is nowhere near overvalued compared to where it was. It hit about 6,000. I think it lost about 75% of its value. Now, the red line, which is the U.S. stock market, in my opinion, is tremendously overvalued. And we're going to see why that's the case when we look over here at the chart from Zero Hedge that shows us the central bank interventions and how much money the central bank has spent over the period of this financial crisis. So this is actually a chart of all the central banks. You've got the Bank of Japan, the Federal Reserve, the Bank of England, and the ECB. So these are the big players in the West, and these are the ones that are printing money hand over fist, and they have been ever since the financial collapse. Now, it starts in 2009, and you can see the light green is the Bank of England, and the dark green is the United States. Then the pink, we'll say, is the EU, and the purple is the Bank of Japan. So you can see in the first instance of QE1 and money printing, the United States took the lead. Absolutely. You can see how much money, nearly $1 trillion, and it stayed very high for a number of years. Actually, no, it's about a year and a half. It stayed very, very high with QE1. Now you can see that the Bank of England was involved, but not nearly so much as the United States. And then you can see this curious ECB LTRO. They give the definition. By the way, this is from BlackRock. You can see down at the bottom the definition. The LTRO is a long-term refinancing operation, the ECB's program to provide financing to Eurozone banks. So I'm not sure exactly what this means, but it looks like Europe has actually been cycling the money into its banks. So Europe is really the only one here that is on the negative line. So they were involved in that first money printing, but not nearly as much as the United States and Britain. And Japan was involved a little bit. Now we get to the next one here, and you can see that this is all three of them, the US, Japan, and the the ECB, just a tiny bit for the Bank of England. The US, Japan, and the ECB were printing money like crazy. This is QE2. And then you can see when that ended, we got QE3, and that was primarily carried by the United States. And now we can see the Japanese coming in and basically destroying their currency. So what will the next one look like? Will it be dominated by Japan? I don't know. Are they going to let the whole thing collapse? They could. Now, just to show you how extreme it is, I've shown you this chart many times before. We want to look over at the US stock market because it's the stock market where all this money has gone. And it hasn't gone to the common man. So you can see, we'll go out to the monthly. You can see on a long-term basis how overvalued the US stock market is. The last financial crisis actually looks small in comparison to the run-up that we've had. This run-up that took us to about 14,000 on the Dow took a very, very long time. You can see this is the 1987 stock market crash. Was a very large event. This is when the plunge protection team began, and you can see that the plunge protection team has succeeded in preventing any plunges. It just has gone straight up from there. So the 87 crash looks very, very small comparison to the financial collapse there, and I think both of those are going to look very small when we get to the next collapse. I think it's going to be something spectacular. So back to the silver chart. This is very important. You can see on the long-term monthly view. We'll go ahead and pull in the MACD just to see, because the MACD monthly was at that point of crossing. You could see it actually crossed right there. Now the MACD is coming up again and trying to make a cross into positive. That would be, in my opinion, the beginning of a very large bull move if that were to occur. And we'll talk to you next time.